Greetings. Welcome to my weekend market recap 21st January 2023. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems for my trading. All the Q components run on the Metastock platform and the technical analysis runs on TradeStation as well. That was the last slide. Let's continue with live systems. Now, it is always good to look back and see how I analyzed in the previous sessions, in YouTube sessions, or how I analyzed on Twitter posts and how they played out. One important and maybe even essential aspect of trading profitably is to be correct on the market. I sometimes tell my trading friends that if you are correct on the market, you may get away with some sloppiness, sometimes a lot of sloppiness on other areas. What kind of other areas? Maybe entry, maybe exit, maybe risk management, maybe even stock selection if you are correct on the market. Now, how does Q systems help me to be correct on the market? One way to know that is to watch the market roundup videos for successive weeks. All of them are saved on my YouTube channel Trading Profitably, and see how I analyzed one week, how that played out the next week, and so on and so forth. Let's do part of that look back today. In the last market roundup, I shared something. What did I share? Among other things, I shared the bucket analysis using QEdge and showed that the percentage of stocks in the uppermost bucket, that is percentage of stocks above upper Bollinger Band, was at more than 28%, and whenever it is 30 to 40%, it is overbought. Looking at that, I concluded that the market was overbought. Was that the only indication I shared last market recap that told us not to buy? No. I also shared the SPY chart, and this was the close of Friday. That is when I had the market recap. Friday closed very bullishly both in the weekly as well as daily 1 week ago. Not this week, the week before. Many people turned bullish looking at the weekly bullish close and the daily close, also bullish on Friday. But I saw there were trendline resistances, not just any trendline resistance. These are the automatically drawn smart trend lines in Q systems called memory trend lines, and SPY had trendline resistance in both weekly and daily. That was the second reason that I thought of not buying and shared that live before knowing what would happen next week. Now, this tweet I shared on Jan 3rd. What was Jan 3rd? Jan 3rd was, no, sorry, not Jan 3rd, Jan 17. This tweet was on Jan 17, and January 17 was Tuesday. Monday was holiday for the market. So this was the first trading day of the week for this week, and I shared this tweet and I showed that SPY created an indecisive candle with bearish indecision at the top, and I commented that shows once again why I don't buy when memory resistance is just above the price. Now this was the first day of the week, first trading day of the week. I will show what happened afterwards, but were those only two reasons why I didn't want to buy at the close of last week? What were the two reasons I shared? One was the trendline resistance for multiple market ETFs. SPY was one of them, and the other was bucket analysis was overbought. Was that the only one? No. I also showed that the 3-month high low was overbought in market breadth total view. Market breadth total view is a single chart view of market internal health. I don't have time to share all the market breadth studies, or indeed all the Q charts that we have in every session. But if you used Q systems and you drill down from the market breadth total view to individual exchanges, NYSE, NASDAQ, and then drill down even further to the major indices, Dow Jones Industrials, Russell 2000, NASDAQ 100, S&P 1500, S&P 500. At the close of last Friday, not this Friday, last Friday, you would know that all of them, 1, 2, 3, 4, 5, all the 5 major indexes, when you look at their internals using 3-month new high low, all of them were overbought. And that of course reflected in the market breadth total view that I shared in the last market recap. So there were at least 3 reasons of not buying. And I did mention that there was no bearish signal at that time. But the bearish signal came on the first trading day of the week when SPY could not go up. Instead, it created bearish indecision at the top. What happened after that? This was the first trading day of the week, Tuesday. The candle color was yellow, neutral. Next day, Wednesday, market dropped sharply. The traffic light color turned red, bearish. It displayed a bear release signal. Price fell, closed right near the low of the day. What happened next day, Thursday? Price fell again. Now the candle color turned magenta. That is, flow also turned bearish. Not only traffic light color, but flow also turned bearish. And that was when many people turned bearish. Isn't that interesting? On Friday, 1 week ago, many people turned bullish and I decided not to buy. On Thursday, many people turned bearish and I decided not to short. Did I share that publicly? Let's see another tweet. This tweet, by the way, was on Jan 19th, that is Thursday, when it fell heavily. On the same day, January 19th, Thursday, when many people were turning bearish, I showed using the weekly expected move on S&P 500. That SPY was already below the weekly expected move. That was oversold on Thursday. So I posted on Twitter Thursday midday New York time that others may be shorting. I am looking for a buy candidate, and I also shared the kind of charts I was looking at for buying today, and that was a live chart. Let's look at the live chart. This is the chart I shared. When did I share it again? Let's see. This is a chart I shared at midday on Thursday when many people turned bearish, but I was looking for buying candidates and I saw this stock. I liked it because it was creating a kind of cup and handle pattern in weekly chart, very nicely breaking out of the trend line resistance, and in daily also it was breaking out of a trend line resistance. The relative performance was sharply shooting up, showing it was hugely outperforming the market. Even as of midday, it was showing big move up 3, unusual buying volume. There was a bullish pressure as well as of midday itself. It was coming out of a Q volatility squeeze. So this was the kind of chart I was looking at, looking to buy, and I shared it at midday, and I further confirmed the buy setup at the close of the day, and that time I also announced or publicized the ticker symbol, that was KT, Korea Telecom, a South Korean company also listed in the USA. This is a tweet after the close on Thursday. 2:39 a.m. Jan 20, so after the close on Thursday before market open on Friday. The breakout setup in weekly daily both confirm. The big move up 3 remained at the close, bullish pressure remained, and by the close we have extremely high volume. So this was the kind of stock I was considering buying, and I indeed bought Korea Telecom on Thursday. By the close itself I had some profit when the by the close of the day itself I had some profit when the trade setup confirmed. Notice the pattern. On Friday 1 week ago, many people were bullish. I stopped buying based on multiple Q analysis. I could have shorted probably, but I didn't short during the week. On Thursday, many people turned bearish, but looking at Q oversold indication from expected move, I started buying, and Korea Telecom was one that I publicly announced. Was that the only stock? On Friday, I shared a stock. I didn't share the ticker symbol at that time. When did I share it? I shared the tweet in the morning session. I wouldn't know if the trade setup would confirm by the close of Friday, January 20th. Not 30th, right? It's not possible. January 20th. I was posting on Twitter as of morning session on Friday that these are kind of stocks you could look to buy on Friday itself. What kind of stocks? Let's study the chart. It was breaking out of trendline resistance in weekly. It was breaking out of trendline resistance in daily with a bullish flow. Relative performance showed it was hugely outperforming the market. It had a large gap up open with big move up 3, bullish pressure coming out of price extreme low, that is price extreme low, and reversing up also coming out of a Q squeeze. This is again I shared in the morning session on Friday before knowing how it would close. And now the market has closed for Friday. Now is the time to look at the stock again. What is this stock? This is Ally Financial, ALLY. Let's look at the stock. I'm using Q Global running on MetaStock. As of Friday's close, ALLY, Ally Financial, has indeed confirmed the weekly trendline resistance breakout, daily trendline resistance breakout, relative performance sharply going up, big move up 3, bullish pressure, price extreme low and reversing, Q squeeze release. And in weekly, additionally, I see a reversal candle and even big move up 3 in weekly. Plenty of buying signals. Now let's go back to the tweet. Remember, I tweeted about it on Friday in the morning session. And what did I mention? I was buying, of course, but I mentioned that this stock had at least 9 technical buy signals. If you added the Q momentum signals, you had more, but at least 9 technical signals in core Q systems. But wouldn't you buy with more confidence if you knew it was undervalued and gave a nice dividend and its industry was among the top 20% of all industries at that time? Yes, you would, I would, and I did check that out within with real-time Q systems at that time in the morning session on Friday itself. Let's look at that. First, let me look at its fundamentals, the scorecard using Q Vital. Ally Financial, ALLY is the ticker, is undervalued. This is using Q scorecard, robust earnings quality. On Friday, it went up by more than 20%, a huge up move. The company is profitable, pays a nice dividend of 3.8%. When I started buying on Friday, the dividend yield was more than 4%. As the stock went up, the dividend yield came down below 4%. And 97% of peer stocks went up. In itself, the industry, that is consumer finance or consumer lending, was very strong. 97% stocks going up in the industry is very strong. How was the relative scorecard? I checked that out using Q Edge. Let's look at that. It is among the top 20% of all industries on Friday. That was true in the morning session when I found the stock, and that remained true at the close of Friday. And it went up, the industry consumer finance, by a massive 3.6% on Friday. This is how you see the pattern again. Instead of listening to others, using a systematic approach and having conviction on that approach, the technique, the tools, systems, I could decide not to buy at the close of Friday 1 week ago and started buying again with confidence on Thursday, when probably everybody was bearish on Thursday. 1 week ago, everybody was bullish. I seem to be little bit ahead of others, and that pays me over time. Little bit ahead and pretty accurate, I may say. If you keep following my tweets and if you keep following my YouTube videos, you will see pretty accurate. Now I will look at many stocks today, at least 6 more stocks. But before that, let's look at the market, global market as well as USA market. Then I'll come back to a number of stocks. What I covered so far is how, once again, using Q systems, I was accurate on the market and I was accurate on the stocks as well. I think so. Now let's look at the market. Let's go back to global markets. I will cover the global markets quickly today to save time. Australian index, all ordinaries. What is the direction? It is sideways because it is inside a range created by trendline resistance and trendline support in both daily and weekly. In the daily, it is above the upper boundary, crossed the previous watermark resistance also. It is overbought for many days. So it is moving sideways somewhere inside the range, nearer to the upper range than the nearer to the upper edge than the lower edge, but still it is overbought. So I am not going to buy now. I could buy at the lower edge. Now I will not do any trading. Range bound, no preferred trading direction. What about Japan's topics? In the daily, once again, very beautifully, topics went up after displaying the very unique Q headwind reversal signal that almost caught the very low. You could start buying from there. You could start shorting when the bearish headwind came. Once again, that caught the very high. After the bearish headwind, after the bullish headwind, it has created higher low, higher high. It is bullish. The upper boundary is far enough away, so it is uptrending, and my preferred trading direction is bullish. China CSI 300. Bullish in weekly, bullish in daily with higher high, higher low, but it is also overbought for many days. Also, jump thrust extreme level has been reached, so I'm not going to buy, but it is bullish. The positions you could buy earlier, you could easily book partial profit by now and hold the remaining position with trading stop. India's Nifty 50 is not bearish either. In a market roundup some time ago, I mentioned if this support is broken, I'll be willing to short, and if the support holds, which it did, I would be willing to buy. So you could buy right near the bottom. Friday's candle is red, weekly candle is indecisive. So as of Friday's close, I am not going to buy, and I am not going to short also because the trend line support is very close. As of Friday's close, I will not buy, not short, but I would have bought a couple of days ago when the support held, as I analyzed and shared in the previous market recap at that time. And UK's FTSE index, it is bullish with higher high, higher low, trend line support, no trend line resistance. In the last market recap, I mentioned that because it was overbought, we could see that from many angles. I was not going to buy. That was useful because price pulled back. Was I going to short? No, there was no short setup, but I would have stopped buying using the overbought signals. Now we have bearish color in the daily, indecisive candle and bear release in weekly. I'm not going to buy, but I'm not going to short also because there is no Q short setup. Mixed picture, but mostly bullish. Mixed picture in terms of my preferred trading direction, but in terms of last couple of days move, maybe 1 week or 10 days move, the global market is bullish. If we look at the global index as a whole, for last couple of 7 days to 10 days, it has been bullish. It went up, but last 2 days it is indecisive. On top of that, we have bearish indecision at the top. So it may be time to stop buying in the global markets. Is there shorting opportunity? No, because the trend line support is too close. Now is not the time to short. My conclusion is, and I look at the USA market in more detail shortly. I mentioned in the tweet a while ago that it is time to buy some stocks, as I did, and I will share some more buying ideas. So one may stop buying in global markets and start to buy in the USA market. That's what I'm seeing. Let's see if that confirms as I go forward. And let's now look at the very powerful market breadth total view, single chart view of market internals. This is where 3-month new high low was in my previous market recap. That was overbought, and I mentioned that as one reason of not buying. What happened on Friday? We had strong accumulation count of 4 and an Eureka day. Eureka was invented by Mr. Ian Woodward. I incorporated it in Q Global Market Breadth. May him rest in peace. Both his signal Eureka and Q signal large accumulation count of 4 came on Friday. Was the market overbought at that time? If I look at the percentage of stocks above 50-day MA, it was not overbought. Overbought would be when yellow line hits this upper threshold. Was 3-month new high low overbought? No. Overbought level is this. 3-month new high low is here on Friday. So Friday we had strong bullish momentum in terms of internal health, but it was not overbought, and that was indeed the time to buy. Interestingly, if we looked at small cap versus large cap, small cap was outperforming for a while, but that changed. Small cap tilted down, meaning small cap underperformed for last couple of days, and growth versus value is tilting up now. Now it is in an uptrend. We have broken the previous high, so it is in an uptrend. So now we have an interesting situation of small cap not being in favor and growth being in favor. If that is so, how did the mega caps do? Let's look at the mega cap tech index, also part of Q Global Market Breadth. Mega cap tech index recovered beautifully after creating a false downside breakout at the watermark support level, went up for last 7-10 days or 2 weeks, and now it is right at resistance. That is one reason to be cautious. I mentioned in the tweet there is a caveat. There are many market buy setups, stock buy setups, but there is something to be kept in mind. One is this trendline resistance being in multiple market views. Mega cap tech index is 1 where we have trendline resistance. And if I now look at the market ETFs, let's switch to Q Elite on TradeStation. Let's use the 2 chart template, weekly daily template. SPY now back near the trendline resistance in both weekly and daily. Remember, on this day, Friday, 1 week ago, the trendline resistance was the reason I said I was not going to buy. And now we are in the same situation again. But something has changed. What has changed? This is the second attempt to break the trendline resistance in last couple of days. And the weekly has a very long lower tail. So price did go down, but bulls were forceful enough to recover price. Will that bullish momentum continue for SPY? We don't know, but certainly some stocks are giving nice breakouts. I shared at least 2 already. One was Korea Telecom, one was LE Financial. But the caveat is still there that market view from SPY from Mega Cap Tech Index is telling us to be cautious. What about QQQ? Same caution. Weekly and daily trendline resistances are nearby. At the same time, Friday's candle is very bullish with bullish flow with a higher low. We already have one higher high. This is possible. More than 50% chance that the bullish move will continue, trying to break out of the trendline resistance, but the caution still is applicable. DIA has no trendline resistance nearby. We have a bullish shape candle on Friday, though the color is bearish, but the shape is bullish. Weekly is very indecisive. If price goes up, at least we don't have any trendline resistance nearby, we may start buying DIA constituents, industrial stocks. What is the nature of the instrument, the direction? This is also moving sideways inside a box. We saw SPY and QQQ were inside range. That was a triangle range, and DIA is inside a box range. And IWM is also near trendline resistance. A reason not to buy. Having said that, there are many individual stocks to buy, but I am not going to jump the gun. Let's look at the market from the other Q angles. Let's look at Q edge. Remember, in the previous market recap, I was not buying. One reason was that the percentage of stocks in the uppermost bucket at that time was very close to 30%, but now it is only 5.5%. So it is not overbought anymore. Bucket analysis allows us to buy. Friday was very bullish. Let's look at the broader picture. Friday, all the sectors were up. 95% of industries were up. 89% of stocks in S&P 1500 were up. That's a very bullish day. The week is still bearish. 5-day period advance decline for sector, industry, stock, all are still bearish. And longer term view, 1 month view and 10-day view, they are both bullish. That's a nice picture to have. Long term bullish, a little bit of a pullback, then short term 2-day, 1-day bullish again. That's exactly like a pullback in an uptrend, and that's the time to buy. So Q edge is also telling us to buy. The Eureka, the market accumulation count in market breadth, they were telling us to buy. Bucket analysis telling it's not overbought. QH sector industry stock advanced decline is telling it is at the optimal point to buy. What about technical breadth using Q Finder? Look at the weekly picture first. Balance between bulls and bears, it's mixed. Almost 50-50. That's the weekly picture. Now again, there is some caution here also. The percentage of bearish headwinds in the weekly chart is much more than 1%, the cautionary level. Now it is at 2.4%. That high percentage of bearish headwind in weekly interval is a thing to keep in mind of. It's a cautionary signal. Just like we had some cautionary signal from the trendline resistances in multiple market ETFs. These are the two cautionary signals. That's the caveat I mentioned, that we may buy but keep these in mind. So weekly picture has some concern in technical breadth, but Friday's picture, one day picture, is very bullish. 96% of all Q technical signals and setups are bullish. That's very bullish. Strength signals also 96% bullish. Trend continuation 97%. Trend reversal also 96. That's a very bullish picture. But is it overbought? No. Because if we look at the price level of bullish signals, majority 64% are coming from mid price level. They are not overbought. So weekly has some concern, but Friday's picture is telling us that we can buy. What kind of stocks we could buy? I always say whenever you see one category with more than 10% stocks, it's easy to find trading ideas from there. You could look at the next higher percentage also. So you could look for stocks with gap up, with bullish flow, probably with some breakout. And if you notice the two stocks I shared on Thursday, Friday, they had many of these, at least two, if not all the three characteristics, isn't it? Let's look back. Let's look at the stock I shared on Thursday, Korea Telecom. Let's use Q Elite so that I can see the historical trend lines. On Thursday, Korea Telecom had a very large gap up and it had a breakout setup. And if I look at LE Financial that I shared on Friday, it had a bullish flow, breakout, and a gap up. So on Friday, if you looked at Finder, let's go back to Finder again. You could immediately, based on the graph, focus on stocks with bullish flow, breakout, and gap, and look for all three characteristics or two of them, or maybe even one of them. Breakout or flow would be enough. But the stock I shared, LE Financials, had all those three characteristics, and it was easy to find the stock out by first looking at the overall picture and then drill down, make a few clicks with the mouse and hone in on that stock. If you looked at the momentum signals, what does it say? It's saying that if we look at stocks with at least one momentum dot, is predominantly bullish. And if you look for more severity, look for at least three momentum dots, then it is even more bullish. So what does it say? The strongest stocks on the bullish side are far more than the weakest stocks on the bearish side. That's the time to buy. Again, one caveat. If we look at jump thrust, percentage of stocks that are at or near, not necessarily at, but at or near, approaching, at least approaching or already at jump thrust high or jump thrust low. 26% of all stocks in the scan, that's all the liquid stocks, the momentum scan returns 1668 stocks. Out of that, 26% are at near or at jump extreme or thrust extreme. So these stocks we would not like to buy, but I'll come back to that later. On the bearish side, it's not so severe. Now, I mentioned I would like to come back to this jump thrust extreme. If the stock was languishing for a long time, then a sudden up move, and this is earnings season, sudden up moves are natural, normal. A sudden up move in a stock that was languishing could lead to jump thrust being high that would not stop us from buying. So we keep the context in mind. If the market was bullish for a long time, then this huge jump thrust percentage would be a reason to be cautious of. But the stocks that I shared, let's go back to LE again, the shared on Friday. If you look at LE Financial, it was going down for a long time. In fact, Friday was the first day it broke the downtrend vigorously. And that has hit the jump thrust high. But that is not a reason not to buy. Because it was languishing for a long time, it is expected that a sudden up move would result in jump thrust to be at extreme level. That's not a reason not to buy. So we keep the context in mind. And you are probably starting to see a pattern of the stocks I am buying. Strongly going up from a narrow range or from a downtrend, breaking trend line resistance with strong bullish force from multiple angles. But were these all stocks in an uptrend before I bought? No. LE Financial was not in an uptrend. I am perfectly comfortable buying those stocks. Many people don't buy stocks unless they are in an uptrend. I'm not one of them. And I do quite well buying stocks that are not in an uptrend so long they have a proper Q trade setup. LE Financial was one of them. In fact, I bought LE Financial when I shared it on Twitter, I think in the morning session, and by the close of the day, I already have more than 4% profit in the stock, in the trade using stocks. I pressed something on my screen, so everything vanished. Okay, they came back. So LE Financial, one pattern you can see. Let's go back to the technical breadth. What I explained that though jump thrust is high in terms of percentage here, that is not a reason not to buy. We have to keep the context in mind. So there are some caveats, trendline resistance, and the weekly bearish headwind, but there are many signals telling us to buy. And now let's look at a number of stocks that you could buy on Friday and that you could buy on Monday also. If you use real-time systems, you could buy on Monday itself. Okay, my audio might have been silent for a while. Sorry about that. I shared Ali Financials. That was a buy, and that was not the only stock to buy in the same or similar industries. Let's look at some more stocks that you could buy on Friday using real-time queue systems, or you could consider buying on Friday, on Mondays. Sorry. And one such stock is PNC. I'll also look at its fundamentals. Okay, sorry about that. I have to restart the Dives programs. I pressed some button wrongly. Give me a minute, please. Edge. Let's just open Vital. I will not open Finder. Let's this look at this stock PNC. While Finder is getting Vital is getting the data, let's look at the chart. PNC went up right from the weekly trendline support. In fact, it created a false downside breakout that's even more bullish. In daily, it came to the watermark support, at which point bullish headwind earlier caught the very bottom, led to a very large price move up after the bullish headwind. Now it came to the exact same level and went up sharply on Friday. Using the trend line support in weekly, which means there is a trend line support in all time frames below weekly, that's in daily also we have a trend line support, though it may not be shown. Weekly supports are always valid for daily. So you could buy it using the concept of bounce long trade setup. Remember I mentioned there are multiple Q trade setups that are not trend following. Bounce is one of them. Using the concept of bounce setup, you could buy PNC on Friday. It also went up with bullish pressure and bullish U-turn. At price extreme low, you could buy it at a low price. How was its fundamentals? PNC medium valuation, high enough earnings growth, 21%. 91% of PR stocks, that's regional banks, went up on Friday, pays a dividend yield of 3.8%. In itself, the industry was very strong. If I look at the relative score for industry, regional banks, that's also strong. Over 2 days, it is one of the most accelerating. Over 2 days, it is one of the strongest as well. And even on Friday, it went up by massive 2% plus. So PNC could also be bought. But was PNC the only stock you could buy in regional banks? No. Let's look at this stock OZK. Look at its fundamentals also. OZK, a peer stock. While it's retrieving data, let's go to the chart also. OZK. And you will see how using Q systems I am deciding OZK to be a better buy than PNC. PNC could also be bought, but if I wanted to buy only one regional bank stock, I would have bought OZK between these two. Okay, my drawing tool is not working. Why? Never mind. In the I'll not use the drawing tool for now. In the daily, we have a bullish flow. We have higher high, higher low. We have big move up 3 here, if you could follow my cursor. We have bullish pressure, bullish U-turn. In daily, it had trend line support, weekly jumped up right from the trend line support with a reversal candle in weekly. OZK chart wise is looking stronger because it is giving a flow long trade setup, that's a trend following setup, and PNC gave a bounce long setup, that was a trend reversal. So if I had to choose one, the trend following one is stronger than the bounce setup technically. And in terms of fundamentals, let's look at that. There also it is stronger. PNC, the valuation was medium, and we have undervaluation in OZK. Secondary valuation is also great. Great earnings quality, some earnings growth, fund accumulation is strong, and of course it's in the same industry like PNC. 91% peer stocks went up. Industry same, but fundamentals stronger. Chart is in an uptrend. So if I had to choose one, I would have chosen OZK among regional banks between these two, PNC and OZK. And that's how, using Q systems, you could choose one of several stocks in the same industry. Could you buy on Friday only based on banking financial industries? No, let's look at some tech stocks. I look at 4 more stocks. One is ESTC. It's a tech stock. Let's look at its fundamentals, and also while it's retrieving data, let's look at its charts. ESTC. I took a few seconds to get my drawing tools back. What do we see in the charts of ESTC? Daily, weekly. Daily is having a nice trend line breakout with bullish flow. What we had prior to the bullish flow breakout, if you look back, it was creating a base at the watermark level where multiple bullish headwinds came and price did not go down after that. After the first bullish headwind, we had a nice profitable swing long trade. Then after the second bullish headwind, price tried to go down, created a false downside breakout, and now we have a confirmed trend line breakout in daily. Price is at extreme low and reversing. That's a lucrative point to buy. On Friday, the stock went up by 8.4%. Still have a narrow stop loss. In weekly, what do we see? We see a watermark support, false downside breakout that coincided with a bullish headwind 1 week ago, and this week we have a very bullish shape, bullish color candle. Both weekly and daily are allowing me to buy using the breakout trade setup in Q. Is it a stock in an uptrend? No. That was true for OZK, but this is not a stock in an uptrend, but it's still allowing me to buy using the breakout setup. So I shared several kinds of setups today in live stocks. One was trend following flow setup, one was bounce setup, and now we have a breakout setup. How is ESTC, the stock's fundamentals? And you see the power of Q systems. I am aligning multiple dimensions in favor of my trade. It's a high growth stock with quarterly earnings growth over 100%. Yearly earnings growth is also high, more than 28%. And industry wise, 97% of PR stocks in application software went up. That's very strong. How about its relative score? The industry is among the top 20% of all industries on Friday, went up by more than 2.6% as an industry. That's very bullish. So we have enough reasons to consider buying ESTC. Now remember the two banking stocks. I looked at PNC and OZK and I found OZK to be better than PNC, both in same industry, but in terms of fundamentals as well as technicals, OZK was better. What if I tried the same thing in technology stocks in this industry, application software? ESTC could be bought, but could I find another stock in the same industry that was better? Yes, using Q, that's quite easy, and I did that. One is Adobe. Let's look at its chart. ADBE, Adobe software. This is also a trend line breakout, but the trend line breakout was as a result of a range breakout that was a long range that was created after price already made higher low and higher high. So the stock started to move, consolidated for a very long time and very nicely broke out on Friday with a bullish flow. In weekly also we can see the range breakout, very bullish shape, bullish color candle on Friday. So technically Adobe is stronger because the stock was already in an uptrend and now it's giving a range breakout. How was ESTC? Let's look back again. It was not in an uptrend. It is just breaking the downtrend. So if I had to choose between two stocks, one is breaking a downtrend, one is in an uptrend consolidation and then breaking out again, I would choose the one that was already in an uptrend. So technically, Adobe is looking better than ESTC. What about fundamentals? Here also it's better than ESTC. It is undervalued, has some earnings growth in both quarterly, yearly periods, great earnings quality. Of course, it's a profitable company and it's in the same industry, application software. ESTC was a growth stock and Adobe is a value stock but has some earnings growth as well. You could say in terms of fundamentals, these two stocks are a tie. One is better in terms of valuation, other is better in terms of earnings growth. In terms of charts, Adobe is looking better. But all of these stocks could be bought, whether it is PNC or OZK or ESTC or ADBE, all of these could be bought on Friday. I bought at least two of them, not these four, at least maybe I would have bought some of them, but I remember buying at least LE Financial and Korea Telecom, KT on Thursday, LE on Friday. Now, market is at trendline resistance, multiple market ETFs. Could you look for some shorting candidate? You might not have triggered the short trade, but you could have identified a potential short trade and execute it if next week the stock, its industry goes down and maybe if the market also reverses from the trendline resistance. What could be one such candidate? Let's see if Q could help me find any such candidate. Yes, I'll share at least one. I think one. I don't have enough time. SUZ. And you see many industries are strong, but I will show you this stocks industry is very weak, and I am buying stocks that are in strong industries, great looking buy setups, and I am thinking of shorting. I didn't short SUZ, but see the pattern. SUZ in weekly has a very bearish candle with bearish reversal, bearish flow. In the daily, for last couple of days, it is continuously going down, unlike the market. The market recovered on Friday. This stock did not. Instead, on Friday, it had a gap down open, fell down further, and decisively broke the trend line support with bearish pressure, very high volume. I wouldn't short on Friday because the market was bullish. But if next week the market reverses from the trend line resistance, then I would not mind shorting a stock like SUZ using fine-tuned real-time chart. That is in terms of technicals. What about its fundamentals? This is SUZ. Fundamentals are not bad. But remember, I mentioned that I have multiple dimensions to align with my trades. One dimension sometimes I may be flexible with, that is fundamentals. It takes time to change fundamentals sometimes, but if on the buy side, I usually don't ignore fundamentals. On the short side, as I say sometimes, I ignore the fundamentals and short based on technical chart and industry weakness. I need industry weakness. How is the industry score for paper products? Let's look at the Q Edge relative score for paper products. It's 2, the second worst industry of all industries, of all 148 industries. That is a very weak industry. And on Friday, we saw banks went up heavily. I am buying there. We saw technology went up heavily. We could buy there. But this industry, in fact, came down on Friday. And the second worst performing industry on Friday. That's an industry where you could look to short. And the chart is also looking quite bearish. Now I will end today's session with one observation, and that is on Tesla, and that is on a pattern that I repeatedly mentioned earlier during market roundups on Tesla. I explained this pattern in several market recaps. I have no fixed format. I describe different patterns in different sessions, and one pattern I talked about for a number of sessions was for stocks that are at jump thrust low, price extreme low, and then all of a sudden comes big move up 3. And I mentioned that very rarely the stock does not recover from there. And I remember on this day in Tesla that I had the pattern jump thrust low, price extreme low, all of a sudden comes big move up 3. Somebody must be buying. It also had bullish pressure, and bullish pressure U-turn, had a bull release on this day. I remember talking to one of the Q traders on that day. I don't disclose their full name, Mr. Ellis, a fine gentleman, and I mentioned that this happened. And I have that pattern in mind when this pattern happens almost always, and I always say like this. I hesitate to say always, but almost always it goes up from there. And what is the preferred instrument for trading? Short put vertical, not the stock, because we are still in a downtrend. The stock may stop us out and go up, but short put vertical, we don't have to worry about getting stopped out. Would we buy on that day? No, there was no Q trade setup. But then we had the bullish headwind at the very bottom, near the very bottom, just a few days later, and you could trade, I could trade, I probably traded using short put vertical, and there were a lot of negativity about the stock in the news from many other people, but I saw that pattern and I was thinking, is this pattern going to fail now? And that would be the first time I would have seen this pattern failing, and it did not. It recovered nicely from there, enough for turning the short put vertical taken on the bullish headwind day into profit. So I will repeat this statement that when we have jump thrust low at price extreme low, then all of a sudden, as if out of nowhere comes big move up 3, that is some big player buying, and I hesitate to say always, but almost always the price recovers from there, recovers enough to give us a profitable swing trading. And the more you observe these patterns and then the Q trade setups and the Q signals, you build a kind of conviction, not only on the technical side, but industry score side, market breadth side. And once you have the conviction, you just keep on taking trades that meet the Q360 degrees criteria, as I do and as I share publicly. They tend to work out quite well, as you know if you are following the tweets and the YouTube sessions. We are beyond the 1 hour point. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend, and as this live session show, as the tweets show, there is no reason not to do that. Trade profitably. Thank you.